Guys, what's going on? My name is Ryan. I trade ETFs, and I like to make videos about the technical analysis that I'm seeing in the charts. So today we're going to look at US oil, and we're here on the weekly chart, and I just wanted to walk through the three phases of a bull market because I think that the US oil chart, especially on the weekly, is very exemplary of what a three-phase bull market looks like. So here I've got the idealized chart for the three market cycles in a bull market, and then there's usually a fourth wave or phase, and that is the blow off phase. But the first one is the stealth phase, and that's where it rises up slowly. It's no longer in a bear market. It's found its bottom and it's starting to take off. The second stage is where institutional investors step in, and it's the awareness phase, and we see a markup in price. We rise significantly, and we actually have our first correction here. The third phase is where most people get in, and it's when the media starts to get attention to it. And there's a lot of enthusiasm, greed, delusion, a bull trap usually, and this is called the mania phase before we return to our mean, and it's a blow off phase. Our mean is this dashed gray line here. So this is the idealized three phases of a bull market. I think that we see that very well here. We're no longer moving sideways. We're no longer in a bear market. We rise up here, and we start taking off, and a lot of smart investors, smart money got in here. Phase two is the markup phase. We have our first bearish correction here, and phase three is where we just launch up higher. I think it got up to 150, 148 at one point, and then phase four, we've been in this corrective phase here. I would probably draw phase four right through here, and we are in the later part of this US oil chart as far as the phases go. This stretches all the way back to 1995, I would say phase one started, and we are here over in 2017. Here on the weekly chart, I am starting to notice some fairly interesting patterns, I guess, on the daily, hourly, and especially this weekly. And perhaps I should preface this video by saying that I know that there's a lot of supply out there for oil that's been pushing the price for oil down for some time now, and the fundamentals in this case might outweigh the technical analysis that I'm about to go over as far as a weekly and daily chart goes. As far as the hourly chart, and I usually don't preface this, I did it last week for US oil, and I'm going to say it again for this week, is that there are some bearish fundamental and political situations that are playing out in the world today, which do point towards lower oil prices as far as a long-term investing standpoint goes. But I am seeing this head and shoulders that's going on here. We have our left shoulder come up, head come up, and we're setting our right shoulder right now. Now the bottom of the right shoulder should be fairly close to the bottom of the left shoulder, and we definitely see that. I gave my right shoulder a little bit of leeway here just because it's easier to show. I have it coming in at about the $40 level, but if you look at the wicks on these candles here, they are basically perfectly aligned with each other here at $42. If we go from this low right here over to this low right here, they're both about $42. So they are very closely aligning with the classic head and shoulders pattern. And if you look at the ultimate bottom down here at about $27, this would be what I would call the return to mean situation that we're seeing here. So if I was to draw a potential mean, it might look a little bit something like this gray dashed line here. This could be considered our mean price. We have been sticking around this price for a very long time, came down to touch it, we got below it, and we came back to touch it again, sort of like what happened over here in this idealized chart. And we did kind of dip a little bit lower, but if this is, just an example chart, is to show what an idealized market phase would look like. So on the weekly, I am seeing a head and shoulders. That's for, your longer term investors. It might drop down quite a bit further. However, as far as a long-term investing standpoint goes, we are right around the all-time low third of this chart, I would say, which would, potentially, if you're only looking at your portfolio once a month or once a quarter, this might be a decent time to buy into US oil if you're, a long-term investor. Let's go to the daily. On the daily, I have some Fibonacci lines here from this high down to this swing low, and we can see that the 78.6% and 61.8% have acted as our guiding lines as far as price action goes. We came down and we were supported numerous times, going all the way back to late 2015s. We've bounced off, we got rejected, broke through, retested, broke through, support, broke through, and then now we're above the 78.6 line. As far as the 61.8% goes, it's kind of just we haven't had as many support and resistances around this line, but it has been acting as a bit of pressure as we've gone up and gotten close to it. It looks like we tried to make an attempt on it and we got rejected off of it. and we kind of made our descent back down to our previous support before, potentially somewhere over here in 2018, we might test the 61.8% level again. What else do we have on this chart? Well, we have this black line right here acting as kind of a channel type of resistance downwards. If I were to clone this and bring it right here, which you'll see on my lower time frames, this is a pretty nice even channel that we've been going down. We came and touched the bottom of this longer blue channel that I have right here. I started with this channel and I just drew it from this top right here, drew it from this top, and then came down, and it touched fairly nicely this bottom here and this bottom. And so I'm going to leave this blue channel that has captured the price action for the better part of the last year and a half, 2 years. I think that this was very oversold down here, and so I'm not going to include it. I want to capture 90% of the price within this channel, and I think that this channel does that very well as far as a daily perspective goes. And it would make sense that we bounced off of this channel, because if this captures 90% of the price action, we would expect price to stay maintained in that, except for extremely oversold events. Let's go to the 2 hour and see what we're seeing. So on this 2 hour chart, we can notice the parallel lines that I was talking about earlier on the daily. This is a clone of the other line here at the top, and just bring it down, and it's acted as fairly firm support for price. As it comes down, it bounces off of this level, and I think that this was a double support down here. So I actually took a trade in USOIL given this double support, as well as the wedge formation that I've been seeing. When we were up here, I did my analysis and took a bear position, and I ended up selling at about right here and only captured about half the move. So I was a little bit disappointed about that, and I've been trying to maintain some patience as we come down and set our bottom up. And now I took a long position in USOIL, and it's working out fairly appropriately. As far as the wedge goes, we came down, we had our A, B, C, D, and our final E, which also has a bit of an overthrow pattern to it as price breaks below this black line. So what's an overthrow? Kind of ideally what I'm talking about when I say an overthrow, well, it occurs very often in wedges. We saw one in my video for XLK and semiconductors. Recently, we come in, we have our 1, 2, 3, 4, and 5, and our 5th has a long wick to the upside, and it breaks out above this upwards channel line. And then we fall back into the pattern, and then we break much lower after that. This is for a bullish or ascending wedge. I've got a descending wedge, but if you just flip this upside down and imagine a wick coming outside of the bottom up here, it gives you a pretty good explanation for what I'm looking at when I say an overthrow pattern. This is the long wick right here. It's kind of the indication that it was the last major push for bears in this situation. I also kind of saw a bit of a head and shoulders, so if you wanted to be patient with it, we came down our left shoulder, our head, and our right shoulder right here, and then we broke out. And if you like the wedge situation better, which I do, you would ignore these and just look at how it acted. So we had our overthrow, we came back, and I always like to see it retouching or trying to get back into this trend and failing and moving back on upwards. So we've definitely seen that, and at the moment I have 2 sell targets which are coinciding with Fibonacci lines here. Fibonacci is your support and resistance, so if I were to drag this all the way down to from our swing high to our swing low, we can see that the 61.8% fib is right here in the sell target, and 78.6 is our sell target number 2. I'm going to go ahead and delete these because I think that they clog up the image a little bit. Another thing that we were noticing on this chart was a divergence. We had 2 of them. We had our slow stochastic making an ultimate low right here at C, and it never came back below this line, but price was moving lower while our indicator was moving higher. This was a regular divergence. And then we had one here in our commodity channel index where we had a low here at this little left shoulder and a higher low in our indicator down here, while the price made a lower low. So this is a second confirming divergence that we had in the chart, which gave me enough confidence to take a trade here in USOIL. Let's go to the 1 hour chart and see what's going on there. On the 1 hour chart, I just wanted to draw this smaller channel that we've been in, and this has acted as pretty good support and resistance lines over the course of the last 2 weeks as we've been making our bullish run upwards. We have resistance, support, resistance, support, resistance, support, and we're coming up against our first resistance. So on the hourly chart, I would probably do a day trade or a swing trade in this. I will probably sell out of some shares, probably half. And then as we make our wave downwards or move sideways, kind of like we did over here, I will try and add another full position. So I'll capture some profits with half of my position, and I'll add a full position once we get here to the new support line, and then I'll add a full position. I'll have a 1.5 times of a position, as well as saving myself the time that it takes for price to move over here and invest it in a different area. So from the 1 hour, let's go to 30 minute. On the 30-minute, I just have a predicted price path, which I saved to TradingView, and we'll revisit next week to see how correct or incorrect this price prediction was. This is coming straight from previous price moves, I believe. So let's just show what I was talking about on the 30-minute here. So if we draw this from our swing low to our swing high on our bullish run 2 times ago, the reason I chose 2 times ago was very specific. It was because of this pattern right here, this upwards and then sideways upwards move. This is a very similar pattern that I think I'm seeing over here with this upwards and then this upwards sideways movement right here. And so what I want to do is I want to go ahead and copy that and bring that right down here. And if you see, we kind of had this bull flag right here, and then we were straight up before falling over and moving higher. And I think that we are seeing a fairly similar situation going on right here in the charts, if you just if you wanted to look at it this way. One of my favorite quotes about trading is that the market never repeats itself, but it rhymes. And so more and more recently, I've been looking back at similar patterns during similar runs to see if I can see any similarities that would guide my future price predictions in the price. And so this is my analysis, and I think that price will have this kind of blow off top, will come down, try and get back up higher, and then fall down. You see that in my arrows here. I think we'll go up, crash down a little bit, make a lower high, and then fall all the way back down to our bottom of the channel. We'll push back upwards, make another lower high, and then we'll fall down briefly, and then we'll shoot up higher past this previous highest high. And then I think that we will struggle at around this area, and this is why this is my sell target number 1. If you want to look at the full measured move, we go back to our hour chart or 2-hour chart, and you could make the argument pretty convincingly. I'm not saying that we won't get to my second sell target, but like I said, some fundamental aspects around oil are convincing enough to me to want to be cautious in how I trade this. And so I'd rather, sell out a good amount and capture the meat of this move instead of hoping for it to come all the way from trend line to trend line to trend line to trend line again. So I'd rather, I usually do this. I try and capture the meat of the move, 50%, 75%, 80% of the move. And so I'll probably sell out 75% of my shares here at target 1. But that is my analysis for US oil this week. I really hope you guys enjoyed it, and thanks so much for watching me. I love hearing from you guys, so please comment, like, subscribe to my videos. They take me a long time to make, do the analysis, do the editing, do the filming. I look forward to talking with you guys next week. Happy 4th of July, and take care.